Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on January 31st. So kind of looking back, we always say that January is very volatile, a lot of cross currents, repositioning among big investors, so on and so forth. And this has kind of been typical with the major indexes kind of hacking lower than higher than this week, of course, the huge Monday sell-off. Now a pretty encouraging, pretty impressive snapback since then. In individual stocks, same sort of action, okay? Overall, from a 10,000 foot view, the top-down evidence, meaning the major indexes, right now is still neutral. And we'll go through a bunch of charts, growth measures, major indexes. They're all still kind of trading sideways over the past 5 to 8 weeks. I will say that I'm open to Monday and the DeepSeek stuff being sort of a clear the decks, shake the tree moment that maybe kicked out some of the remaining weak hands that had still hanging around during the past 5, 6, 7, 8 weeks while most things consolidated. So we'll see how that goes. I'm pretty impressed by that. But right now, mostly sideways. And in terms of stocks, I'm going to talk about the AI stuff in a couple minutes. So I'm going to give you all my thoughts on that. In terms of just the individual and leading stocks in general, it's kind of the same as last week. I would say it's better. There's more good than bad. That's how I feel about the market. There's more good than bad. We're just not seeing a lot of decisive act. There's things that are kind of like hitting new highs, but they're going up, 50 cents a day, no volume to them. It's not so much that I think it's bearish. If I owned them, and we own a lot of these that look good, you're holding on. But in terms of finding new entry points, especially with earnings season really ramping up for this type of, growth and glamour names I focus on, it's just a little bit trickier. So in Cabot Growth Investors model portfolio, we're still half in cash. I think that's probably too much. I'd like to put some of that to work next week and probably will. But like I said, it is a little tricky to find, high odds entry points among stocks that have shown some good volume, hitting new highs, in gear with the market, that sort of thing. But overall, I'd say more good than bad, but also just a lot of sideways action. I'd like to see a little bit more evidence that the Fidelities and T. Rowe Prices and all those people are really stepping up and piling into some of these stocks. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So as always, we're starting with the NASDAQ. Here was the big Monday, whatever it was, 3.5% drop on the DeepSeek AI infrastructure, blah, 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 blah. Okay, and I'm going to let everyone else fight it out. I know every day it's, somebody's saying this about CapEx, someone else is saying DeepSeek isn't real. I'll let everyone else fight that out, and the institutions will tell us, what to do. Big picture, though, we're still just kind of in this range, and we're just seeing this across a lot of pretty much every index out there, okay? I will say that, again, for the NASDAQ, this is sort of late December. I would say for most growth stocks, maybe the peak was sort of December 10th, so maybe back here. So for the last 5, 6, 7 weeks, sometimes 8 weeks, depending on what you're looking at, we have been hacking around. And so this could be sort of the final headline, news-driven thing that shakes the tree and maybe paves the way for another leg higher. I'm not saying we're going to go up 6 months from here without a pullback, but I'm open to that possibility. But I would just like to see a little bit more. Right now, technically, the intermediate term trend is up here, but realistically, not leaving your brain at the door, it's still kind of sideways. The S&P 500 is a little bit stronger. It hit new highs earlier. So, you can call that positive. But when you kind of run through, here's the small caps, okay? They're still kind of buried here, not even above the 50-day line. Here's the mid caps. Better, but again, certainly not in a clear uptrend. I will say this 25-day line has turned up, which to us is important, but I'm kind of putting more weight on the overall picture of the last few weeks, kind of sideways. If you look at like the IBD, any of the IBD indexes that are growth, okay, same sort of, maybe today it's probably up here as I record this. This is only updated at the close of the day, but kind of mid-range. The IPO fund does look better here, so maybe this is coming out. So we'll see how it goes really at the close today and into next week. That's encouraged. This is what I mean. It's encouraging maybe that was sort of the shakeout, and now we're getting some money to flow into some glamour names, but just mostly, sideways here. The QQQE, which is the equal weight NASDAQ 100. Again, very nice snapback action, still kind of in this range. So I would just say we're sideways, but like I said, we're getting there, and a little bit more positive action, especially if we start to see some action among individual stocks here, would be good, okay? And probably tell us that the worst of this last month and a half of consolidation is over and the path of least resistance is up, okay? I did want to just mention interest rates have been, they're up, they're down. As you can see here, big thrust higher. This is the 10-year note. Pull back to the 50-day line, big thrust higher. Now we're pulling back to the 50-day line again. So far, the uptrend, which is, quote, bad, is normal, this pullback. But, rates have been helping here. And I would just say this is something, it's a secondary indicator, of course, that I am watching. Because if you did come in and get some big break down here, it depends why. But at the same time, if we did see interest rates really crack this intermediate term uptrend, probably a bull case for the market, okay? When it comes to, I wanted to spend a couple minutes because this is obviously what everyone's talking about, is the AI stocks, okay? I would just say in general, and what I wrote in for Cabot Top 10 Trader today is, 1/4 chance, this is very ballpark, maybe it's 1/3 chance that, that was the shakeout and these things march higher from here, basically, and that, that was just the final shakeout before paving the way to new highs for these stocks. I would say there's a higher odds chance that these things are going to take time to consolidate. Okay, now NVIDIA is sort of the popular stock, and I'm not going to spend too much time on it, but just the stock really hasn't gone anywhere since last June. Not saying that means it's over, and it really hasn't bounced much, this week. If we can get back to the daily chart market surge, here we go. You can see it's still kind of hanging around the 200-day line, even as the NASDAQ has bounced nicely. So some of these things that are, the chip index in general, this is SMH, has come back. But I'm seeing a lot of stocks that are like this. We're kind of, I don't have the percentage here, but kind of halfway back from the meltdown sort of thing, okay? So you have sort of the Broadcoms, okay, which was looking great. 250 to 200, now we're at 225. So there you go, right? Basically halfway back, okay? Marvel Technology, MRVL, a little bit better it looks like, just eyeballing it on the chart. But, odds favor that these things are going to have to sort of back and fill. I will say that the strength of the bounce so far has been encouraging and does raise the prospects that this recent low here on Monday, Tuesday, will hold if we start to sell off again. Right now, I would just say, if you own them, you can hold them, use some sort of stop so that they don't melt down on you in case the sellers reappear. But at the same time, there's not really much to do with them, right? I mean, I wouldn't say they're tremendous buy points. I mean, they're very volatile. They're in the news every day, that sort of thing. The other thing I was going to say is when you are evaluating some of these names, and you should be because they have been leaders, look for tennis balls and not eggs. Eggs are kind of like NVIDIA so far, which just got hit and it's just kind of sitting there. It can't even really bounce. Now, that doesn't mean it can't bounce by the close today or start bouncing next week. But so far, not really bouncing, and that doesn't surprise me. It's very obvious, very, I don't want to say over-owned, but it's just an obvious stock that's been in the news. At this point, it hasn't made any progress for about 8 months. Okay, so we'll see how it goes. Conversely, you have some of the, like, for instance, here's, which one? Here's Vistra, VST. This is an electricity company. You can just see, 3 days of big volume, big snapback. Does that mean it's a good buy right here? I wouldn't necessarily say that. I'm just saying, just judging on the power of the snapback, that looks pretty good, both volume and price-wise. Celestica, CLS, this is a highly unusual action, which I tend to focus on because the unusual is what counts, This thing got crushed. This is sort of a parts maker and all that. It got crushed on Monday and snapped back with an earnings gap yesterday and then even further follow through today. Again, that doesn't mean this thing can't swing down 10 or 15%. It probably will. Who knows what happens, but it could easily swing around. But it's that sort of action that should kind of flag it for you. And even today, we'll see how it closes. I'm recording this around 11:30 in Eastern time. But this is CRDO, which we have talked about many times. Again, just wipe people out here on Monday. And frankly, the first couple of days didn't really do anything. But now just today, it's starting to accelerate. And there is some volume. So we'll see how it closes. But that's kind of what I'm going to be watching going forward for the group, how strong the bounce is, both in terms of price and volume. And then among the individual names, which ones are bouncing the best, that sort of thing. If these things are going to go higher, over the next 2 or 3 months, they're going to set up. I don't mean they're going to set up like a 6-week consolidation, but they might go higher and then chill out for a couple weeks and provide some sort of entry. So how you want to handle them is up to you. Those are my thoughts, though. AI is probably still Penalty box might be too strong, but they probably need some time. There's going to be some backing and filling most likely, but just be open to the possibility that that was a shakeout and that some of these might just basically go higher from here, of course, with the normal wobbles along the way, okay? Elsewhere among individual stocks, I would say what was interesting was some of the names, some of the groups that were growth kind of kicked into gear as money sort of flowed out of the connectivity and obviously the AI infrastructure stuff and into some things like software, cybersecurity, and whatnot. So this is CrowdStrike. Now, this is cybersecurity. I'll mention a couple. This is sort of interesting. We own this and had good money, back here. And then this is when they had their huge snafu that basically the entire world like shut down for a few hours because CrowdStrike had some weird update. It's been coming back here. The growth numbers aren't terrific going forward, but maybe they're conservative. And the stock is just kind of consolidated in here while growth stocks, did the same. And now it's sort of stretching its legs higher here. We'll see how it goes. It doesn't have earnings for a while, but CrowdStrike's certainly a big liquid name in that group. You have some stuff like OKTA. This is still, I wouldn't say this is a leader, but just you're starting to see some things perk up here. Rubrik, we've mentioned a bunch of times in the cybersecurity space. Nice shelf. Again, this is sort of an example of a name, though, that Rubrik looks good, full stop. As well, though, it's improved, obviously, here, but it's just kind of like there's no volume. It's just kind of wedging to new high. It's not really busting loose. So, if I owned it, and we do have it in top 10, I would certainly hold on, but it's one of those things where you'd like to see almost like a little bit decisive strength and then maybe a pullback or something like that. So we'll see how it plays out, but that's certainly set up pretty well. CyberArk, CYBR, has been acting well for a while. And you can see it's actually been stretching its legs really since the last day of 2024, okay? Elsewhere, just sort of some liquid names. Cloudflare, this is like an old winner. Just here's the monthly chart. This was sort of the pandemic top back here. It crashed and burned. And it's been repairing the damage here, but last year was basically one of consolidation, you can see. But it really kind of broke out a few weeks back. If we go to the daily chart, it kind of broke out back here, and it's really obviously accelerated higher here. And this day with big volume was the day, I guess Tuesday, right? The day after the AI meltdown. And it continues to look good. So, pullbacks here would probably be viable. But this does have earnings, again, February 6th next week. Shopify is another one with earnings, let's see, February 11th. But this is, we had flagged this back here. It was kind of like Cloudflare. It had a off-the-bottom rally for 18 months or whatever. Spent most of last year building sort of a consolidation, and then had this huge earnings gap that was 10 times average volume, take my word for it, which is pretty rare and usually just one factor, but it's usually a clue that on an initial breakout earnings gap that, the stock can go higher. Well, it did stall out, but again, it's just kind of had this sort of, a lot of these stocks have just had sort of a normal, 1, 2, 3, 4, 5, 6, 7. So this is the 8th week of consolidation. And now the stock is showing, again, some volume, perking up to new highs here or testing new highs. We'll see how it goes. So that looks pretty good. Duolingo is an old friend. Again, not to kind of keep talking about this pattern, but it had this sort of bear market or off the bottom rally for a year and a half, and then had this big top and correction, which was very deep. This was like 40% deep. The comeback on this weekly chart was very intriguing. We never quite got into it in Growth Investor, which probably worked out fine anyway. And now it's sort of, again, you're in this 8-week consolidation. I like this. There's no selling volume on the weekly chart, really, at least in the last few weeks. Earnings aren't out for another, month or so. And the stock is kind of rounding out. Very volatile stock. Thing can move around 5 or 6% a day, but Duolingo, kind of an interesting play there. Outside of, traditional growth, I still think like this is XLI, which is the industrials. I mean, you're not going to, industrials, but they look good here. It looks like they're emerging from this correction. And I kind of like how they've pulled back here and it's pretty calm, cool, and collected. Deere is a turnaround there. Again, I know, Deere is not like, growth stock, but I just like how this has been. It's been in top 10 a couple of times, actually. I just really like this long setup. And you're just starting to see buyers maybe percolate here as they look ahead towards a turnaround in business. So there is stuff like that working. Big banks, Citigroup and stuff like that continue to look good. JP Morgan, that's not my bailiwick, but it is what it is. They look good. I would just mention elsewhere in finance, we're starting to see a little, some of the payment stuff. This is TOST. TOST had these, if you've been watching these videos, they had these 3 big volume weeks on the upside. And then a couple weeks later, it was kind of like, geez, I hope this pulls back. Well, then a couple weeks later, they said this year's margins were going to be good, not great, or whatever, and the stock sold off. But again, you get, it's not perfect looking, but you kind of have this 1, 2, 3, 4, 5, 6, 7, 8, 9 week, I guess, consolidation. So you get, which is kind of enough time for people to kind of say, I don't want to, I'm moving on to something else, right? So it's been this kind of 2-month consolidation. Now we're starting to perk up. You'd like to see volume kick in. They have earnings in 2 or 3 weeks here, so we'll see how that goes. Shift 4 looks a little bit stronger. FOUR, they had a shakeout when the CEO got nominated to head up NASA, actually, of all things. But it's kind of held the 50-day line, now accelerating, not accelerating higher, but really, pretty nice comeback here in the last couple of weeks. And then last but not least, I would mention Bitcoin. We've mentioned it here and there. In fact, I'll mention GBTC is one. There's a few that actually own the Bitcoin. And you just see on the weekly chart, it had this very long, multi-month consolidation here, broke out and had really just 4 or 5, quote unquote, just 4 or 5 good weeks. And it's been holding itself very nice and tight in here. Could be 3 weeks closing tight here in the last 3 weeks, not to get too in the weeds. So anyway, we'll see. It's kind of a risk on, risk off measure for me, but just as a trading vehicle, obviously some sort of breakout on GBTC or IBIT, they're all kind of the same, would be bullish, okay? So back to the market, like I said, it's kind of, when you go through things, it's not hard to see things that look pretty good. But when you do step back, just about every index, and especially growth measure, and just looking at a lot of stocks, there's just a lot of things that kind of look like the NASDAQ here, which is very volatile. I mean, look at this chart. It's literally like, I'm just tracing it out now, right? I mean, that's exactly what's been going on the last 5 weeks. So, that's not the easy. I'm not saying that's bearish, but it's just not clearly, in an uptrend that institutions are buying everything. And you just see this among a lot of growth stocks, a lot of growth measures. You see a lot of stocks, continually hit old resistance and then back off, which is kind of a sign that the institutions aren't quite, playing for keeps so far. But overall, I mean, the long-term trend is certainly up on a lot of these things, on most of these things. And I would say the snapback from Monday, excuse me, I got a frog in my throat. The snapback from Monday so far has been impressive. So the question is, I'm not saying it's got to go up 2% a day from here, but can we hold these gains, which would be a mini, kind of a change in character, right? Every time we get up here, I guess to the 20,000 level, we sell off. So can we get up to the 20,000 level and hold these gains and then push higher? That would be sort of a change in character, tell you the market's changing for the better, or at least getting even better. But we'll have to see how it plays out. Right now, I favor staying close to shore, but just mainly, I'm not opposed to buying, but smaller positions to start. Be aware when companies are reporting earnings. And then ideally here in the next 2 or 3 weeks when some of these leaders and potential leaders report, we'll have a lot of merchandise to sink our teeth into. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.